Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's April 19th. This will be our chart lesson for the day. It was mostly all downhill today. As you can see, there's a two-tiered channel. This channel didn't really help you. Somebody asked me about it I think they asked in the forum, either that or sent me an email asking me what I thought about it. I think it's valid, but I don't think it really helps you. As you can see, we definitely had a downward bias all day for the most part. But really from say 940 or so all the way into the close, we're just in a tight trading range here. From about 41.46 or so up to about 41.58 maybe. And we spent most of the time, a lot of the afternoon really in this yellow. Really from lunchtime on, we were in this tight yellow range. And so there is a downward bias here. But with this range, you had a few buy opportunities, and you really just didn't get a good setup to sell up here. So I just don't think you have an option to sell here. There's a second entry short right here that you might take. I didn't mark it. I probably should have marked that one green. I went back and forth about it and couldn't decide. But I think the reason let me just back out before I tell you that. But I think the reason I didn't mark this was because this made a tick higher. It didn't break till below this bar, but technically the green one's your signal bar, and so that's why I didn't mark it. So I'm not even going to mark it green. It was a really tempting trade, but when you see that inside bar, they're not. You can't trust inside bars. It's still a second entry short after a break and a new high, but you would think we might be going back up to here as well. And so without a perfect setup, I just don't think you take that trade. So that's why I didn't mark it. It was really tempting, and I really liked that trade myself, but looking back on it now, I don't think it was worth taking. All right, let's back out here. We'll talk about the trade. You see, I'm actually going to take this. Well, I'm going to leave it on there because I think if you did see it, the midline comes into play a few times and maybe is helpful. Seems like there was a trade somewhere where the midline came into play. But anyway, you could, if you didn't have it, you still really need to trade this shorter term stuff. And you can see how I marked all the shorter term swings and both the trends and the little tight congestion and all. I didn't really mark this one, but prices were really just running into resistance right there. And once we turned down again, you'd look for a measured leg, and you see we almost got a perfect measured leg there. We missed it by a ticker. We actually went a tick or two further. So, but anyway, there's not a lot of trades today. It was kind of a slow morning because after we opened, we spent most of it in this right here. Actually, let me back out one more time here and show you something that I forgot to talk about. Notice that we closed here on Friday. And when we opened today, we opened down here. So everything in this gray from this close on Friday to the end of this gray right here is not on the daily chart. That's overnight trading. And so on the regular session chart, daily chart, that's not going to be there. So there's a gap between where that closed and opened on the daily chart. And you can see prices tried their dangest to fill that gap, and they couldn't do it. They did fill it on the overnight chart, but they didn't on the daily chart. So you would expect prices to try to go higher here at some point. So I hope that's clear there. Anyway, 7 o'clock actually came right in here. I marked this trade just to point it out. Notice that we're moving down. You get a first entry, second entry, and it turns down right off the EMA. It's the first break of this, but there's still a little room left down here. So if you were in early, you could take that trade. But it's definitely before 7 o'clock, and I usually don't recommend. Really from about 6 to 6:30, we start to see the volume pick up. But by 7, you're usually pretty good. You're good to go. Today was one of those days where there wasn't a lot of volume regardless. But anyway, I marked it just to point it out. It was a great failed second hit, just to show that there are some during the overnight session. And if you look through here, there's others too. Notice this low, first entry, second entry after 2 legs up. So that's a second entry short there. It didn't trigger to the inside bar, so it wouldn't be a good trade. But the price action works, and it's the same. It's just you might have to sit there forever, and it's just I don't recommend trading it because of the low volume. You get some slippage and stuff like that, and it makes it a lot harder. So, but anyway, I just wanted to point that out, that there was a nice little failed second entry long right there prior to the open. But 7 o'clock came just as we were going into this little congestion. And notice we made a low right in there. We came back again here. And then we came back a third. Actually, this is probably about the 4th test of that. And you got a nice signal bar right here. This one would have been good enough to trade. I believe that's after 7. Yeah, that's 720 right there. Except it's just so congested. But notice how we finally pushed up and then came back. And then now it's looking like a range there. But regardless, we tested this low at least 1, 2, 3 times prior, so that's at least a double test. Plenty of room back to the EMA. I like going long there, and maybe we go all the way back to the top again, which we do. So that turns out to be a pretty good trade. And then we just kind of go into this right here. This one is tempting. It's a second entry long, but this is a good example of once you see 1, 2, 3, 4. 5 bars stacked up side by side, and a couple of them have no bodies or very small bodies. This is what will happen. It goes up. It looks like there's clear support plus the EMA, and it breaks higher and stops you out and then goes right where you think it does. So just stay out of that stuff, especially if you're not sure what prices are doing. Prices are having a hard time here with resistance. But we know the EMA tends to act as support too. So it's really hard to know what prices are doing. We've already got a close outside a new high. And technically, even though this is sideways, there's a little bit of a downtrend here. And if you draw it, you can see and you get a break and new low and then it goes higher. So I just didn't draw the details in that low. But they're there. And you can see this one, you get a break. It tried to go higher twice and make a new high and couldn't, and then turn down. So use those short-term trend lines to help you see this stuff because it's there. And I mean, if you got fooled here, if you would have drawn this probably would have given you a little bit of a clue that, hey, we've already had a break and new high where we've turned down multiple times. So there's a good chance we could just go straight down. So just keep that in mind. And I just don't see anything else in here worth trading. There is a higher low right here after this failed breakout. But again, it's just so congestive. Especially when this bar doesn't break higher here and you've tried to go higher once, twice, 3, 4, 5 bars there and couldn't break higher. So it's not worth risking it. But when you get this, now you finally get this double test and this breaks higher and turns down. And this does break lower and back up. So it gives you a chance to get a better entry. There's just about, I think there's enough room anyway, but just make sure, maybe you enter this with a limit or try to get a little better entry just to make sure you got room to get out. And turns out this one at the bottom just drops out of it. So you might have, if you didn't get shaken out of this one, you might even caught a runner. Just depends on how you played it and where you entered. But I like that on the triple test on a sure range here. Although you got to be careful about this support, so just make sure you got room to get out before that. So that's the key to that trade. Then of course we drop down here and we pull back. Here's where notice the midline on the range here, and that's kind of iffy. I mean, you could have had that in a couple of different spots, but you can clearly see the midline is somewhere right in there. It's really hard to know exactly where the support is here. Somebody sent me an email on this today saying, how did you find this? You just look for where you get the most touches, and then you look for where you get the most touches down here. Originally, I had this higher, but I moved it down when we started to get all this resistance here. I think earlier I had it up here, and I think I even had it down here, and I tightened it up as you started to get more touches. And once we drop lower, just look for a measured move. It's going to be somewhere in that vicinity. And there you go. Notice this measured move right here. It's the same as this one. Well, didn't mean to do that. I just measured that range, drop it down, and we bounce right in there. We went a little lower, and that could be because my range is off a tad. Because this one is not real consistent. You like it when it's more consistent. Like, look where those lows are. That's really consistent. Most of those highs are consistent. Like this range, look where the lows, how consistent they are. Those are easy to measure. One like this, not as easy, but you can clearly still see that's a range. And so just get in the right ballpark. That's all you can do. Once you started to turn down multiple times there, this was a little obvious, more obvious. It's right in here somewhere. So that's what I changed it to. But there's a triple test there, and it breaks higher and turns down and goes out an engulfing bar. I'd let this one break lower and drop a limit order back a tick or two and try to get a better feel just to make sure you got room. It doesn't matter because the bottom falls out of it, but anyway. And then it backs up right here and gives you another turn down off that key entry point, knowing you're going down here. It's only, there's a little, notice the new high, and you try to go higher once and so twice. So there's a little hidden second entry, but I think this is really advanced. The only thing I like is it's just off a possible key entry point. And you really don't have this confirmed until way down here. But what I was trying to get at with the midline is notice how it pushed through, pulled back, and tested and turned down. That's really why I like that trade, because you probably don't have this trend line anyway. At least it hadn't been confirmed. So I marked that one. Somebody else, that led me to another thought there. Somebody else asked me, and now I can't remember what I was going to tell you. Maybe it'll come back to me. Let me just think about this trade again. I can't remember what I was going to say. I'm sorry. But let's just move on. That one's pretty tough trade. Oh, I already talked about it. It was trying to figure out where the highs and lows of the range were. That's what I was going to discuss, and I already discussed that. So I didn't miss anything there. So you didn't miss anything important. Then we drop down here and we just start going sideways. It's a shame that you can't get up in these lows after multiple tests, but you just don't really get a good setup here. There's just not enough room between any of these bars. They're either not good enough signal bars, or they're not good enough, and there's not enough room back to the highs either. So you get a good bounce out of there, which you would expect, because when you come through this support here, you're going to test that, and we haven't tested it yet. So it doesn't surprise me that prices came back and you got a few tests, and when it held after multiple attempts, notice what happens again. Prices turn down, and that's what you would expect. That's when you want to try to enter. This is not a great entry. Notice your high, first entry, second entry. So there is a trap, and that's a really good signal bar, but it's still in the congestion, and there's a lot of matching lows. But my guess is sometimes you got to be worried about those matching lows. But in this case, if it pushes through, that's probably the line in the sand, and it's probably going to make another move down, hopefully a measured leg. You don't know that it's going to go straight down like that, but you're looking for a measured leg similar to this one if we're going lower, or at least back down to test the support here. But it never even checked up. It just went straight on down for a measured move. And I mean, that's almost a perfect measured move. And then it bounces, and you notice that you do get a close outside and a new low all in pretty much one bar there. And then it runs up, makes a higher low with still plenty of room back to the EMA. So I like going long there, and maybe you catch one of those nice moves, and this one is. So maybe you catch a runner on that one and get a nice run up. And then you get a break, first entry, and you pull down. So there's a second entry long there, and we hadn't retested this high. But that's also congestion, so you could treat it like a little failed break lower. And on a second entry, you might take that trade. It's below the EMA, but that's why I like it, because you're probably going to pull back to it. And but it's a little bit aggressive, so I marked it green. And then you get a first. Notice you got a new low now, and you get a first entry and then a second entry right off that key entry point. And you can see we're making higher highs and higher lows. So, but that is your break and two legs up to a new high. and there is some resistance there. But this will probably act as a trap, and you'll probably get a scalp out of it. So I marked it green, but you can see you wouldn't have got anything much more than a scalp, and then it turns down, and then it goes right back where you thought it would. So it's a little tricky. I did mark it green just because I figured somebody may ask about it, but I'd probably recommend not taking that trade. Here's the better one if you want to trade a true reversal. Notice how we broke out up here a couple of times. We tried to go higher 3 times. We run down, you get a first entry long, and then you go to head a second leg down, then you come back with a second entry long that fails right off the EMA, right off the high of what looks like a market that's going to head down again. And look how bearish that bar is. That's up, and look at it how it goes. All these people were getting long in here, and now they got them trapped, and they run all their stops, and then it comes right back again. So that was a great setup. It's tempting to try to go long down here, but you just don't really get a good setup. There is a higher low right here. I believe it breaks lower there. Yep, see how it breaks lower right there? There's a higher low right there that you could consider taking, but I think it's a little too early to be trying to come out of here with this channel, because you could have this bigger channel, and you can clearly see prices working both sides of it. So I don't think that's worth trying to go long. And you actually get a second entry short up here with a triple test. Notice let me just draw the resistance line across there, and you can see you made that high right there on that bar. Then you tried once, twice, and this is a first entry, second entry. It's a nice small bar. It's only 5 ticks way away from the EMA. I like going short there. No, you don't have a break of that channel right there, but you can clearly see this thing's going back and forth, back and forth. Look at the EMA. So it's you got to play this more like a range. So that's resistance there is pretty important. The fact that you're that far away from the EMA too. Then of course you get 2 legs down, and you get a small bar, but it's just not good enough for a signal bar. 4 ticks, and it's a shame because it's so far away from the EMA, and you know we're probably going to run back again. And then you get another second entry short up here, but signal bar is too bullish, and then you kind of start working down here. Finally, you make a new low, and you make a higher low, but I don't think that signal bar is good enough, especially getting that close to the EMA. It could tick higher and turn down because we're not down to this side yet. So I think it's just a little early. You do get a reversal right here. Actually, I take that back. The reversal actually happened right in here, and that's just not a reversal pattern. You want it to find support off the EMA, and right here we're just looking at resistance off the low of what was support across there. But notice you did make a new swing low there, so that's a first entry, and now a second entry right here. But I treated this like a double bottom, so you get a first entry, second entry short, and a nice bullish bar off the trend line, off the EMA, on a market that looks like it's going higher. So you can see how many times we bounced off that trend line, and now that kind of confirms that it's definitely in play. And again, this is basically just a double bottom. Even though that hot low is a little higher than this one, that's still a double bottom there. So first entry, second entry, so when it breaks higher, and then you come up here and you make another double top, so a new high, first entry, second entry, and you get a little triple test, nice bullish bar. It's the first break of that trend line. Plenty of room back to the top. I like that one. You actually get another second entry here, but now you've got a break and new high. And if you took this, it works, but I just didn't like it because we've already had a break and new high. We could be headed lower. So I think that one's kind of risky. And then once you see you're kind of going sideways, but notice it drops down there and bounces. Now you got clear support across here. Runs back up. There's no reason to go long there. It's not a good enough signal bar. There is a higher low here, but it's right back into all that congestion. It would have worked, but technically it doesn't break lower either, so it's really just part of that same move up there. Even though you do have a little 2-bar matching high, it actually really, I'd consider the correction here. And look at all that resistance right across that. That's the midline of the main green channel, and prices have had a hard time getting through there, so you just can't go long right into that. Runs up and you get a second entry short, but again, no signal bar. Runs down, and look how many times you've tested that. This is a pretty decent signal bar. I marked this one green. You could argue for it to actually be blue, but the reason I marked it green is because the next bar is an inside bar and it didn't break higher. That gives you some, now you got 3 bars there. It looks like congestion. So it could break higher, fail, and break lower, and that is a new low that's lower than that one. So that gives you a little concern, and you can see how strong that move down is too. That's not rejection. Right when that bar formed and didn't break higher, that's not rejection. Now it does end up bouncing on out of there, but it didn't come out of there on rejection. So I don't really like that one for that reason. I marked it green, but there's some reasons to be concerned about that entry. So that's what I saw today. If you back out the big picture, you can clearly see the bias is mostly down, but because it's acting like a range, you can really trade this in both directions, especially once it was obvious the green channel's in play. And it was really obvious once we started working this midline, this last, after lunch, it was real obvious. We actually just had a tighter yellow channel, or I'm sorry, range this afternoon, and so everything slowed down considerably. I mean, from 12 to 2, 12 o'clock's right in here somewhere. So from 12 to 2, that's all we had. So in those 2 hours, we just didn't have much. Versus from maybe 9 o'clock to 11 o'clock, look at all that movement in bars where it just, we saw that a couple of weeks ago where after about lunchtime to 2, it really slows down a lot, and we're seeing that again now, or at least we did today. So anyway, even though there weren't a lot of trades, that was a 22-minute, took me 22 minutes to get through there, but there was some good stuff to talk about there. So hopefully you learned something today. I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.